Good morning, Vero Beach. I'm Trip Hernandez with Dale Sorensen, and this is your weekly watch for March 27th, 2023. This is a weekly piece that I put together that lets you know what's going on in our market, what's transpired since last week, and the key topics that we're going to be watching in the weeks to come that pertain to housing and how that's going to affect our buying and selling. So let's get right into the numbers here. As you can see, our coming soons sit at 42 units. Those are units that have not hit the MLS, but are scheduled to come on in the next few days and or weeks. That has an increase of 7 units from last week. Our active properties sit at 794. We're starting to reach that 800 mark. That is an increase of 24 units from last week, so we have more units on the market right now, 24 units more than we had last week. Our under contracts are at 493, and that has increased also by 23 units since last week. And our solds are sitting currently at 32 units sold for the previous week, and that was down 16 units. What happens is we typically see sales happen in the very middle of the month or the very beginning / end of the month. So if the month ends on the 30th, we'll see a lot of closings happen on the 30th and or the 1st. And we'll also see a lot of closings happening right at that sort of middle of the month mark. So that's when we'll see the most sales happen. And next week, our numbers should increase from what we're looking at currently. So those are the numbers for the week. Let's get into some of our news. Obviously, we've been watching interest rates for a while. This is an interesting chart. This talks about buyer demand. When are buyers most active? And we see on this chart that at 6.5%, that's when we see buyer demand go from limited to good. And we have been in that sort of limited market for the last few weeks. We've been watching the interest rates go. They were as high as 7.3% back in October. That dipped down into February. For one day, it was under 6% at 5.99%. And then it increased again at the beginning of March up to 7.1. And today we sit at 6.38% for a 30-year fixed interest rate. But the fact that we're at 6.38 means that we are below that line, and we are now kind of sitting in a good market for buyers. So that's a good thing for all of us. I think that sellers will start to see houses sell a little bit more. And it gives buyers the ability to get back in the market and have a little bit of buying power. As we talk about interest rates, a few months ago, back in January, we were discussing where we thought rates were going to go. This chart here represents what the experts were saying about where interest rates were going to go for this year. And as you can see, they were predicting rates to bump up a little bit as the year started and then slowly decrease over time. So they had us at 6.2 at the end of the first quarter. We're about to end the first quarter, and we're now at 6.38, so not too far off. Also, we've seen some reports from the Fed, so we don't expect the Fed to be ratcheting up the rates much more. And we expect all of these rates to start dropping as we head into the summer. So as you may have recalled, I mentioned as a buyer, if you're not buying new construction where they're giving you incentives, it may be worth watching the market, but also waiting for the market so that interest rates come down. And as rates come down, that'll give buyers a little bit more opportunity. However, as a buyer, when everyone's waiting for the rates to get better, that means they all jump into the market at the same time when they think that they're the best, and now there's a feeding frenzy which drives prices up. So be careful about that. As we move on, I wanted to discuss this new housing report. This was on Yahoo Finance. As you can see, the headline reads, "Home buyers moving swiftly to lock in a good deal now. Mortgage rates continue to melt as economists dream of a real estate rebound in the spring." And that all goes back to what the Fed is doing. They're slowly curbing how much they're increasing interest rates, and that should be a good thing for the housing market. And one of the things I wanted to bring up, this was a chart I found on Fortune, And it talks about home price growth by the decade. And as you can see, starting at zero in the 1990s, 2000s, 2010s, and thus far in 2020, with a zero starting point, each decade saw a return of about 30 to 50%. And the average for the interest rates for those decades ran about 6.8%. So, if you're thinking about being a buyer and you're waiting for the interest rates to come down, which I hear so often, be very cautious about that. If you find the right home, you don't want to be waiting to find the right interest rate. You want to be getting that home while you can, and while it's available. You may not see that home come back on the market, or that type of home come back on the market, for a year or two. Our inventory is so low right now. If you can find a house that you love, get in it while you can. If we're going to see a 30 to 50% return for the decade, now's the time you want to be getting in. That return will far outweigh that quarter, 0.5% you may be trying to save on your interest rate. So if you have questions about our market, if you have questions about Vero Beach in general, please feel free to reach out to me. All of my information is below. Again, I'm Trip Hernandez with Dale Sorensen Real Estate in Vero Beach, Florida. Have a great week.